All right, everybody, welcome back. Please feel free. We have some more seats. Move on in for the next panel. One quick piece of housekeeping. I was told by some of my colleagues that I may have been spreading just a little bit of fake news around the Steve Miller Band information. If you already have registered, you just need to make sure you have one of these handy-dandy little bracelets. If you have this on, it's all good. If you haven't yet registered, please feel free. You can go to registration, sign up, and they'll make sure you're well equipped with what you need to enjoy the show tonight. So, hope everybody enjoyed the conversation with Sir Tim Berners-Lee as much as I did. I think it sets the tone for the balance of the day. Our next session is entitled Up Close and Personal with the Competition. I think it's going to be a great conversation where we'll look at the competitive environment and how different players are thinking about the payment space. I'm really pleased to introduce our moderator, Kaushik Rajgopal from McKinsey will moderate. He is the managing partner at McKinsey, and he's also head of the U.S. region. He founded their digital payments practice, covering mobile, online, prepaid payments, and obviously given that background, he's very, very well suited to lead our next conversation. So I will hand it over to Kaushik, and he'll introduce the panel.
Thank you. Well, welcome everybody. We're delighted to have three distinguished panelists here. I'll start out asking each one of them, with Corinne here, to introduce themselves and say a little bit about what their respective companies are up to.
Sounds good. So hello, everyone. Corinne McMillan. I'm the CTO of Cambridge Global Payments. We're an organization that's been around about 25 years now, and we service our customers to do international payments in about 140 currencies across 170 countries.
I'm Sergio Fogel. I'm a co-founder of dLocal. And our company, what we do is we help e-commerce and digital goods companies to accept payments in challenging markets in Latin America, India, Turkey, and some Middle East and North African countries.
Good afternoon. My name is Rahul Pai. I'm the CEO of UAE Exchange, global money transfer company. We have close to 6.75% market share in the total money transfer business, which makes us the second largest money transfer in the world. And we are part of a group that includes some of the industry-leading brands like Express Money, Travelex, Remit to India, and a new upcoming digital bank called as Ditto.
Excellent. Welcome, each of you. Why don't we start with, Corinne, maybe I'll start with you. Why do customers choose your service? What are the elements of the proposition that is compelling for them?
I think our customers are choosing our service today, because we do spend a lot of time on our front-end technology. We spend a lot of time understanding the customer need. We spend a lot of time redesigning our own technology platform over the last 2-3 years to drive a better user experience for them. Whether it be, on the web, whether they're integrating, or whether they're using a mobile platform to interact with us. And I think these are parts of it, and I would love to, say that it's only just the technology why they're coming to us, but I do think that there's an element of, what I would call sort of consultative sales that both our sales force do, along with some of our tech integration folks as well, that really, does take the time to sit down with our customers and understand where their true pain points are and how we're going to solve those pain points through the integration or through the web, just, rather than sort of handing them a specification and hoping they can kind of get on with it on their own. So I believe this is, part of the key reason why we're very successful in this area.
That's great. Sergio?
In our case, the main point is actually conversion. When you go to an e-commerce merchant, what they find as they expand into emerging markets, they see their numbers, their conversion percentages drop down very significantly. So if you have, and normally when you go and you start to analyze numbers, you see that you are losing a lot of customers in the very last stage of the conversion funnel, which is the payment step. So unless you are optimized for each one of the markets, people want to buy from you, but what they find is that they cannot pay. And that's where our solution comes. We help them reach figures that are very similar to the ones that you find in developed markets.
So if you look at why customers choose us, and if you look at how we were able to get to this kind of large processing volumes, there's only one answer: convenience. So we've always tried to put the customer at the center of any transaction, and what we've seen, our effort has always been to see how can we make it much more faster for a money transfer for the customer. Can I get the money that the customer gives to me to his bank account or to her pickup point as fast as possible? How can I crunch the times? Or how do I get them, what convenience can I give them in terms of a superior customer experience? Or the convenience of getting the best rates or the money transfer rates. So these are the things that actually get the customers to come to us and do transactions to us.
Rahul, talk also a little bit about, in your business, and I'd love to hear Sergio and Kareem's views as well, on disruption versus collaboration. Now, the theme of the panel is up close with the competition. My observation is that payments is a business where historically there's always been co-opetition, so both competition and cooperation. So talk a little bit about how you think about disruption and collaboration with more traditional players.
So disruption is definitely there. But the question is, where is the disruption happening? So if you look at it, we've seen over the last 2 to 3 years, a lot of companies have come up. They've made a mark in the money transfer space from a consumer standpoint of view. Now, what they've done is that they've been able to provide a far better user experience to the customers. So I will not name them, but I'm sure many of you know these companies. Now, what happens is that the disruption is continuing to happen there, but what space we are trying to do, or what we are trying to make, is in the space of co-option, wherein what we do is we want to collaborate with such companies by providing them the infrastructure or platform to provide or do money transfer services. So while the disruption continues to happen, newer models come on the front end or the customer-facing end. We would like to play the role of being the platform provider for anybody who wants to provide a disruptive customer experience platform. This is how we see it happening in the coming days as well. So what we've already started to see is that because of the kind of infrastructure that we've built, we're seeing some of the new age fintech players coming and wanting to partner with us. So one of the examples I can give you is the fintech money transfer startup called as WorldRemit, fairly known in Europe. So we power a lot of their transactions at the back end through our brand Express Money. So this is how we see it. We want to collaborate with more and more fintech companies and provide them the best infrastructure.
Mm-hmm. That's great. And just to add to that, I mean, we have pretty much exactly the same viewpoint at Cambridge. I mean, there are so many great startups and fintechs out there that are building some really great stuff, and as you say, really great UX. And we are finding ourselves in that same space where we are providing that back-end infrastructure to actually facilitate those payments. And why is that? Why are they with us and not with a large institutional bank? And I think the real reason is, and I'm not sure if you agree, but in terms of how those fintechs need to integrate, how they need to talk to us and talk to that back-end provider to help them facilitate these payments, cannot be done sometimes as easily or as efficiently with some financial institutions. So they look to players like us who might have the right endpoints out there to talk and work with them, and might drive a better user experience for them the way that we can integrate with them. So would 100% agree with that. Yeah.
Yeah. In our case, if I may add, we also, I don't feel that we are disrupting the bank's business. We are helping disruptors get into the business, companies such as Airbnb or Uber, and et cetera, et cetera. But we are not disrupting the banks, because actually we are making transactions happen that wouldn't have otherwise happen. The banks today, if we look at part of our business, which is money flowing into those countries, payouts to to freelancers, to Uber drivers, to property owners. Sometimes we're talking about a payout of $50, which a bank simply cannot process. It's too costly for a bank to process an international remittance or an international wire for $50. It doesn't make sense.
Yep. Yep. And just to build on that, Sergio, the word local is in the name of your company, and one of the universal truths about payments is that there are so many differences depending on the country you're operating in or the corridor you're operating in. So talk a little bit about that. What are the differences you're seeing in your business? How do you manage and create value? And what advice you'd have for players who are trying to build global franchises? And what is fundamentally a local business?
Sure. Well, first of all, let me point out a few things that are common among all the markets that we serve. In most of the markets, the consumers that we are serving are only now entering the internet, accessing the internet for the first time. They never used a PC, so they're going first through the mobile. In most of these economies, they are eager consumers, but they are starting to consume online for the first time. And in many of the cases, they don't have a regular internationally enabled credit card. So if you're going to any of those markets and you say, I'm going to accept Visa, MasterCard, Amex, and PayPal, no one will be able to pay you. That's what's going to happen. Now, each one of those countries is completely different. So if you go to a country such as India, for instance, most of the consumers over there, they will have an e-wallet, super popular in India. You go to Africa, you find the same thing. You find M-Pesa very popular. You go to other markets, and for instance, in Latin America, there isn't virtually any leading e-wallet. Some of the societies are very cash-based. Peru is completely cash-based. Uber had to adapt their business model in Peru to accept cash payments to the driver. Other countries such as Brazil, in Brazil there is a fairly developed e-banking system. It's actually in some aspects it's even more developed than what you'll find in the US or in Europe. Argentina is in a transition, so every market has its own peculiarities, and our value proposition is that we hide all those complexities from the merchant, and we allow them to have just one interface to us, and then we handle all that complexity around.
And that just touches so much on the collaboration side as well, and how so many of us, whether it's a bank or even somebody like myself at Cambridge, need to collaborate with the local specialists and who can understand, because there's no possible way, right, that we could know every possible nuance about every corridor that we're about to pay into, right? So, yeah.
Yeah, and we also tend to see this happening across wherever we operate. And in fact, I agree with how India is evolving as a market in terms of payments. So recently there was a regulation because of the adoption of mobile wallets. India has opened up, the regulation has opened up or allowed money transfer, cross-border money transfer into mobile wallets up to 50,000 rupees. So the market is evolving with each passing time. And the important bit is that many of the markets that perhaps the two of us operate in, one is in South America, and for us we are in the predominantly doing a large activity in Middle East and Africa. It is more cash-based, and that's where, like what Sergio was telling about the cards. So that's where a lot of education is required if we have to shift towards the digital. So one of the models that we've invested in is something what we want to refer as assisted commerce or assisted digitalization, where what we've done is we've put money transfer kiosks in some of our branches or stores, and we are actively educating our customers who come in to do transactions over these kiosks. So that is their first, so for a set of consumers, that's the first experience on the digital. So they start, because we have our own tellers helping them do the transaction, they start doing this transaction, and once they are used to doing it, and once they find it more convenient, that's when they go and start doing on their own in the kiosks that we have placed outside the branches. So it differs from country to country, but yes, the customer preferences are evolving.
Talk a little bit, Rahul, maybe I'll start with you and then get others' thoughts here. Talk a little bit about regulation. You're in a business that is heavily regulated, not just in one jurisdiction, but when money moves across borders, multiple. What are the kinds of investments you've made, both in terms of people, also technology? Increasingly, there's a lot of AI capabilities in risk and compliance. And what do you see going forward?
Okay. So regulations are different for different markets, or the regulators in different markets behave differently. So if you look at it in terms of advancements in regulation, if you look at the overall global landscape, we find that regulations have evolved very fast, and they are up to speed with the fintech revolution in Europe, in US, to an extent in India and Asia Pacific. But if you look at Middle East and Africa, it is yet to evolve. So there what we see is that regulations still are comfortable, or regulators are still comfortable following the current traditional route of money transfers, and which is where the concept of regulatory sandbox becomes very relevant nowadays. And that's something, that actually is helping players like us to innovate. So if we did not have regulatory sandbox, we would probably not have been able to do a lot of activity, especially on the stuff on AI in certain parts of the world. So that is something that we are very conscious about. But yes, regulators are moving into, or they are evolving, they are learning the landscape and picking up fast. But in terms of, while there is about regulation, what I actually want to touch upon is the compliance aspects and how companies like us are investing in compliance. So what's been the perception about this kind of industry is that most of these operators, if they're not a bank, if they're a non-banking financial institution, though they are regulated, they may not be optimal in terms of their compliance standards. But what's actually happened is that over a period of time, these players like us have actually invested heavily on compliance, and we are at par or maybe a notch better than some of the banks. For example, in our case, so we've gone ahead and invested in a bank-grade compliance system with a company called as NICE Actimize, and that actually rivals a lot of bank compliance systems. And we also have invested heavily in terms of compliance resources. So our group alone has around 550 employees who look only on compliance. So that's the kind of investment that we have made in compliance, and that's what we are committed towards. So the regulations and compliance are evolving, but there is a long way to go.
I agree with all of that. Maybe I'll touch on a little bit our compliance as well. We have also made some pretty steep investments as well. We did not choose Actimize, though we did have a look at them, but it's just so important, right? AML is changing, so it's just critical, that we've got the right platforms. And we, of course, did choose something with AI as well, so that we can when it comes to those AML rules, it's not just a constant human tweaking, of course, right? Now we're getting some learning, some machine learning in there. We're actually starting to see, great technology whereby rules are suggested based on certain patterns, and those are really helping the compliance officers. So that's certainly something that's been great for us that we've done. And the regulatory side, I'll touch on something just kind of quirky and technical that happened at Cambridge over the last couple of years as it relates to paying into different countries around the world, and some of the nuances and some of the data elements, that you actually need to actually successfully make a payment there. I think we've found, as we've been collaborating with more in-country specialists, as we've been working with banks on the ground in some of these corridors, that they've said to us, payment cannot be made without this or without that, and it could be anything from a tax ID right through to, Russia has some very strange ones, which I won't go into all the details. But so we spent a lot of time actually over the last 3 to 4 years really optimizing our own environment with a deep understanding of what all those are across each country and corridor. Because we were just trying to achieve, the best possible route of payment with the least possible rejection and return. And we've managed to take a lot of those rules and a lot of those learnings from some of these in-country specialists and really propagate them back up into our own front-end technology so our customers can now feel and understand what is required to make payments in these corridors. So it was a big initiative for us.
That's great.
Yeah.
If I may add to that, well, actually, we are finding, of course, the regulation everywhere. First of all, one thing that's very interesting is that if you're talking, for instance, about blockchain, whereas in in developed markets, some transactions that are being done through the formal banking system are moving to the blockchain, and that has regulators a bit worried. You have to take into account that in these markets, it's actually lots of cash transactions that are moving to the blockchain. So regulators are still puzzled by blockchain, but what is absolutely clear is that they don't like cash transactions. Cash is, in terms of a regulator, is the worst possible medium of payment. Having said that, again, there are nuances, different regulations that you need to comply in terms of taxes. We had a situation where a customer of ours sent payments as a test to Argentina. They were starting in the country. So they said, okay, let's try and send 10 wires and see how people react to that. And their success rate was 0. None of the payments reached their destination. And it turned out that the person receiving the payment had to go to the bank before the wire was even sent and present an invoice, which rendered it completely useless. So we helped them develop a way, for the freelancers to comply with the regulation without having to actually go to the bank and present all the paperwork and so on.
So there wasn't an in-person KYC requirement? It was just
actually, it wasn't KYC. In that case, it was they had just to show that they were signed up for tax. They had the tax ID.
I see.
But it gets sometimes very, very complicated, and again, it's completely different from market to market.
That's fascinating.
Yeah.
Let me touch on something we were chatting about earlier, which is talent. And each of your companies has a pretty unique vantage point on it. Corinne, maybe I'll start with you.
Yeah.
You're here in Toronto, which is a hotbed of tech and other talent. What is it like? What is it like for you to attract talent here? How easy or difficult has it been? Who do you find yourself competing with these days?
It has been difficult, there's no doubt. We're competing with banks, Scotia, to name one. I don't know if there's anybody in here from there, but they've got a great thing going over there. Attracting millennials has been certainly challenging for us, and not even millennials, just in general, because of the likes of some of the larger organizations coming in like Amazon and Slack and so on and so forth. So what have we done? We've done a lot, actually. We've changed all of our policies around vacation, around working from home. We have done a number of...
so more vacation?
More vacation, more working from home. Yeah, we're a great place to be if you're a developer or a software engineer in general. But no, we've also we've taken the time now with our internal HR recruitment to get out, market ourselves at schools. So we do that twice a year now as well, and just to get the Cambridge name out there, and just to let them know and understand a little bit about who we are, the fact that we are a fintech, and why it'd be great to work at our organization. So some of the initiatives for us.
Exciting.
Something similar is what we've also done. Only thing is that, so this is a very different region. Our talent attraction typically comes from Asia. We get more people from Asia. But the lure of fintech is so strong nowadays. Everyone wants to be an entrepreneur. Everyone wants to build a billion-dollar company from scratch. So it becomes difficult to actually start or hire people out of college. And but yes, we've played our part. We've tried to be as much attractive as possible. We've not given so many holidays.
I have to say something about that. Even though you're saying you're recruiting from a different area, we do get that a lot here, even in Canada. The students are coming out, and they're doing their own thing. They're doing their own business, they're doing their own startup, all of them.
Yeah.
And so we've taken it upon ourselves to say, just come and do an internship with us and just get the feel for it then, feel what it's like, continue. You don't want to squash any innovation here or anything like that, right?
So we've been able to attract, what we've done is we've tried to change on what talent we want. So on the technology front, so it is very difficult to get the talent that we want in terms of innovation. So there what we've done is that we've gone and started doing strategic investments in technology companies. So instead of trying to hire the talent or curtail their entrepreneurial skills and come in an organized kind of a system, we would rather allow them to actually do what they want to do on their own, but we would rather put some money and help them do their bit, and we'll take whatever or we'll partner with them to get the technology. Yeah. But on the other side, on the corporate side, that's where we work closely with colleges and try to get them at the initial stages. So there are still a set of people who don't only want to do tech. They would rather stick to the traditional employment route, do a little bit of corporate stuff. So that's how it is. So the hard part is the tech talent. And there, what we've done is that we've tried to follow a very different route of strategic investments in startup companies or partnering with them to get the kind of knowledge base and innovations going for our company.
Yeah, talent is a challenge all over the place, and our philosophy is a bit, in a way, opposite to yours. First of all, what we feel is that we are competing for talent, not with the bank next door. We are competing against, Facebook and Google and so many companies. People are today working remotely. So our approach is a bit on the other side. We try to make the work environment as fun, as friendly as possible, so that people will feel that the social part of working is also adding to the work experience. Not only that, also the learning and so on. But yes, it's a challenge, and it's going to be even more challenging in the near future.
Mm-hmm. There are fintech, blockchain entrepreneurs in the audience, and there are banks in the audience. One piece of advice from each of you to either the banks or to the entrepreneurs in the audience on what to do, what not to do?
Okay, in terms of fintech, we're willing to partner. If you have a good idea, we are here. So we can be contacted. We would love to work with you. In terms of to the advice or kind of message to the banks, we're not here to compete with the banks. We are your friends. We need you. You need us. So there's a lot of commercial sense to partner with players like us. So that's how I would like to say.
Great.
I don't think he could have said that better. I'm not even sure if I have anything to add.
The advice I would give is that the world is much larger than US, Canada, Europe, and actually many of the solutions that have a certain value added in Europe, let's say, when you go to emerging markets, sometimes they have much less value added, but sometimes they have a huge value added in those markets. So sometimes you just need to broaden up the horizons and think about how your solution may be helping people in completely different markets, and try to find those extra value addeds that are at the end of the day where money is made.
Excellent. So as we walked into this hall here, you walked on the letters that spelled out the future is here. So let me close with a question about the future, and then we'll open it up to questions from the audience. So we sit here in 2017. Let's put ourselves out 10 years to 2027. I'd love to ask each of you for one prediction. And it could be about fintech, it could be about the blockchain ecosystem, it could be about payments more broadly, maybe not about nuclear weapons. But one prediction from each of you for 2027, something that will happen, you predict will happen before then.
Well, I guess, we're here at Ripple's conference. I think we've got to talk about blockchain, and I do really believe that we've only scratched the surface on some of the use cases that are going to be made available to us. If any of you were here yesterday and saw Siam Bank up here, as well as Santander and SBI, I mean, that was just a fantastic conversation. They've just scratched the surface. They've just done corridor A to corridor B, using blockchain, and they've seen so many key advantages to doing it in terms of serving the customer and speed and transparency. I really, truly believe that there will be more of that. 10 years from now, if we were all making our payments like that, it would be great. But I do think that it's going to take time to get there. But I believe that it's going in that direction, and it's going to continue.
Great, thank you.
I think that, of course, the gig economy and the gig economy in general is going to continue growing. Most of that is based on platforms, and today, if you think about it, virtually all of the platforms are based out of the US. I think we'll see new platforms emerging from the other markets. I think we'll see huge platforms from China going out to the whole world, new platforms coming out of India, coming out of Brazil, of Mexico, of the different countries. And I think we'll see an order of magnitude more of commerce between emerging markets rather than through the developed economies.
That's great, thank you.
I think if you ask me my prediction, I think there would probably be a new cryptocurrency that comes up.
Just one?
Just one, yes, I was going to say that.
It has to be only one. The Bitcoin, I'm not saying Bitcoin would be that one, it could be something else, but it will learn from what Bitcoin did not do right, or did not do, what was the wrongs that Bitcoin did. And perhaps that would probably change the way we look at payments in entirety, or change the way we look at settlements. And that's what's going to come up in the next 10 years, according to me.
A more adaptive cryptocurrency that learns from the mistakes of prior generations.
Yes.
Cryptocurrency. Excellent. Well, that's a provocative note to close on. Let's go to questions from the audience. If you raise your hands, there's a couple of folks with microphones who will come to you. There's one over here.
Thank you. Interesting discussion. So I think the panel has generally assessed that, there's co-opetition between banks and payment service providers like yourselves. But the reality is that you want to take over that market. So let's get real, right? In terms of funds and what that is, right? So there is time, certainly there is transition and so forth. Now banks can also continue to adapt so that they can change their model as well. So at the end of the day, it really is almost indifferent between whether it's a bank providing payment services or payment type of models versus a fintech or some type of other firm out there. So my question really becomes, do we see that merging? Do we see that blending? Do we actually think there's still going to be a distinction between banks providing payment services and fintechs or non-banking financial institutions providing payment services? Or just going to be a blur 5 to 10 years from now?
Go ahead. I've got a point of view on it, but we'll go to the panel first.
Okay.
Sir, are you a banker?
Banking technology provider.
Okay. All right. So my take on why I said we don't compete with banks is that despite whatever we say, we say we want to take a portion of this market, or we want to capture a bigger market share on the payments. Whatever said and done, we can't do it without a bank at the back end. at some point of time, we need to settle this. The money needs to move from, if it's a cross-border, money needs to move from one place to another. So there will be a bank involved at any point of time. So we can't go against a bank, but yes, we can compete with them in terms of service. And that's perhaps what the banks also need to understand. I'm sure this thing will continue. The players like us will continue to compete with banks, try to get a bigger market share. But obviously, it will be definitely not with the mindset that we will take over a bank or we'll go above a bank. But at some stage, at the back of our mind, we know that we need one bank or the other to help us settle these funds.
If I may, I think, yes, it's going to happen. There's going to be lots of competition, and banks will start offering the type of services that payments companies are offering. But I think we'll see a lot going in the other direction as well. We'll see a lot of payments companies becoming banks and starting to offer banking services like lending, like current accounts, like new type of services. So it's going to be tough competition, looking a bit further on.
And my take would be very similar to yours. I mean, we will always need financial institutions. We will always need to settle our funds. We will always need to have an operating account at a financial institution. I think it is going to continue to merge. I mean, there are institutions that we use around the world to make our payments. There are our tier one banks, large banks around the world that are our customers to make payments in certain corridors. And there are some institutions where we are literally their customer and they are our customer. And I think it's just, I just think that's the way it's going. I think we are perhaps a little faster to market on some of the innovations, some of the ability to connect with, different on-country players, and some of the institutions look at that and say, hey, that's a great vehicle. I no longer need to do that integration. I can already deal with Cambridge. I can still send my same Swift message, and they'll look after the rest. So I do think it's just going to be a nice harmony the whole way through. I really do.
Yeah, I'd simply add that when this question comes up, there is obviously cooperation and competition, but what banks are really talking about is who owns the customer relationship and who owns the infrastructure. Because ultimately, in financial services, pricing power accrues to the entity that owns the customer relationship. And I think the reality for banks now, my view, right, is that customers are more in control now than ever before, right? So with devices like this, more and more of the functionality for which you had to walk into a branch, which implicitly meant that the bank was in control, right? I'll do this for money orders. I'll only do this for checks. The bank is in control. More and more the customers are in control. And I think what's going to happen is there are going to be businesses built where there are non-banks that own the endpoints, that own the customer relationship, and banks may provide the infrastructure. There may be cash in, there may be cash out, like money transfer. It may be true for certain segments. And I just think banks have to get more comfortable with that over time. And I also think for banks, the other imperative is to say, what are the customer segments where you want to have the relationship? And how are you going to invest in a world where the customer is in control to make them happy and excited to be with the bank as the primary provider? Other questions? Yeah. Okay, so it's a security question.
It's security, and you know that from the previous experience, great technology happened to get in some, bad hands, and that had a negative impact on the overall evolution of the product. So how do you see this in the future? What do you do to protect, make sure that what you build and develop is really for the good hands? And
yeah. Great. So how do you think about security and making sure that your technology doesn't fall into the hands of bad guys?
Well, I guess I can start with that.
You have 2 minutes.
The list does go on and on and on, everything from network perimeter to all of that. But no, I mean, some of the newer, innovative stuff, I think, it sort of started with two-factor, which has been around for a while, and, basically all of us have it. It's a regulatory requirement now. So I think we're going to see a lot more going forward in that, of moving away from, the typical, second factor to more of a biometric type component. A lot of us are already gravitating toward it. And we can do that now, of course, because people are starting to use more devices like their phone and like their tablet where they have access to cameras and so on and so forth. So, I mean, that's just sort of access point and login. But, maybe another interesting take on it, which, we tend to think about at Cambridge, and just because we operate sort of in an agile development environment, and we're constantly sort of inserting security best practices into each and every development story that we write, such that, when it comes time to doing the pen testing and the things like that, that we've already thought about these things, they've already been incorporated, and we're just keeping it a little bit more rapidly up to speed as we develop along, rather than, waiting for that annual pen test to come out and, and then you're scrambling to fix, your critical issues. So there's some interesting take on it, hopefully.
So I don't have a ready-made answer to this because I'm not the security person. But nevertheless, how I see it is that obviously in large organizations like ours, what typically tends to happen is we invest time and money in trying to ensure that our assets are protected. Through the right kind of security systems and all that. But if you look at it, we look at the fintech players. That's where the typical challenge lies for them. If they start worrying about the security, if they start worrying about putting this security layer in place or a detailed security layer in place, that will actually slow them up. Okay, so generally what we see is that many of these new startups or fintech companies, they tend to go low on security at the beginning, and once they start seeing traction, and that's when they start putting a portion of their investment in trying to protect their assets. So a company like ours, yes, we've enough measures in place to ensure that our assets are protected. Through various policies, through various investments in security systems.
That's a great point. I remember talking to a fintech founder about this, about security, and his response to me was, I've learned not to solve problems I don't have. So, when I get to having the cybersecurity issues, but until then, I have to survive, right? It's not a.
The thing is that today you get there very quickly.
Yeah.
The problems get to you very quickly.
That's the reality. Go ahead, Sergio.
No, I mean, for us, security is a concern at all levels of the organization. We discuss that at the board level, at the management level, during the hiring process. It has to be a critical part of the culture, because otherwise,
Agreed, yeah.
You can never lower guard. You have to be constantly, and if it's a challenge to hire talent, hiring security talent is even more challenging, and you cannot compromise on that. You need just the very best people that you can hire. There's no compromise.
Other questions? If not, I might ask one, just building on the security point, just about the evolution of views on privacy. I remember the first time somebody told me to use Venmo. And I was onboarded onto PayPal in 1998, right, with the $5 email bounty, so I'm not a millennial. And I remember using Venmo, and my reaction was, why would I want all my friends to know where and how I'm paying? Obviously, I was not the target segment. And I'm just curious, as you look at your customers and consumers, do you see a shift in expectations of privacy? Are we at an era where people really don't expect privacy anymore? Or is that too strong a statement? Just curious.
No, I think people expect privacy. I think we take a lot of time to ensure the PII, the actual data elements that are protected in the deepest of ways, right, and encrypted. But what are we changing maybe to help with that? I mean, certainly and I think a lot of fintechs have this. I don't think this is just specific to Cambridge, but just the ability for the person, and purely speaking B2B, right? I mean, I think the older way for B2B was you would get an invoice with banking instructions on it, and your customer would key it in, and then it would be paid. And sometimes those banking instructions actually came through on secure email. I mean, there's a lot of things that we've done to just ensure that that's not the workflow, that's not the user experience anymore, right? And that's everything from, giving those vendors their own portal to come in and securely, put their own data in and so on and so forth. And now they're no longer having to share that data, through unsecure emails or with their customer who is purchasing from them anymore. I don't know, I'm just trying to think of some innovative ways that we've kind of dealt with privacy. Views from you guys?
I think it depends on whether people understand the definition, or what's the definition of privacy. That's how I would like to say. Because people, right now, if you look at it, how many people know what they're signing up to when they download apps, or when they go and log into something? So we've been closely looking at the credit scoring algorithms, companies which do this, and typically what happens is their claim is that they will be able to profile a customer and see whether he's credit worthy or not. And how do they do that? Many of them say that they have around 100-point check. What is the 100-point check? They have Facebook. They profile the customer based on how he looks at his Facebook, how his email ID is structured, or how many times has he accessed certain sites. So this is all there. So people don't realize that everybody talks about privacy, but what people don't realize is that nowadays there is nothing actually which is private. If suppose you have an Android phone, everything is tracked. So you don't actually realize that it is being tracked. And perhaps in a million, you will have 100 people who are worried about this, and they go behind this and try to do something. Regulators are doing their bit. The PST, Payment Service Directive 2, talks a lot about the data privacy and protection. But if you look at it, my kind of take is that going forward, people probably would not be privacy for people. They would willingly be, because for them access to the kind of services is more important. They might overlook the fact that they're giving away data to many people.
Great. Terrific. Well, thank you, audience, for being so engaged. And thank you, Corinne, Sergio, and Rahul, for a wonderfully thoughtful and provocative panel.
Thanks for having us.
Thank you.
Stand up for a picture.
Okay.
They want a picture. Oh. Again, another hand. Thank you for Kaushik, Corinne, Sergio, and Rahul for a great panel discussion. Always fascinating to hear the new and innovative thinking that goes on as these payment providers are striving not only to work with banks, but obviously deliver even better customer experiences for the end user. Next up, we have a discussion where we're going to highlight in sort of a speed round fashion specific experiences that some of Ripple's early customers have been enjoying. The break this time is going to be a little shorter. It's 15 minutes. We're going to start at 3 o'clock. So we'll look forward to seeing everybody back here at 3 p.m.
would be